Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. It's Wednesday. Looks like we had quite a bit of movement overnight, but you know, my workspace is screwed up, but I got this other screen fixed. So let's go through that first really quick and then see if we can catch up here. So treasuries, you know, they had a little bit of a dive and then a rise back up overnight. I'm not 100% sure what's going on there. There's been all this news of like, there was like a explosion in Poland and all of that. It looks like it was an accident, but everybody was really panicked that there was going to be like Article 5 invoked and a war and all this sort of stuff. So that could be related. S&P 500 actually relatively tight range overnight. Oil at the moment kind of a little under pressure. Gold and silver continue to just whew, amazing. Copper looks good too, but not as good, right? It's pulling back for the time being. Bitcoin under a little bit of pressure this morning. Here we're getting the news. I don't know what news we had. Oh, this was retail sales, core retail sales. Month US retail sales month over month, actual 1.3%, forecast 1%. S&P 500 does not like that. Oh man. Well, like I said, I don't know what happened, but like it looks like my workspace got all screwed up. Let's see if we can fix it here. Oh, it's actually, it looks like it's not too bad. It doesn't look like they're too happy about it, though, does it? There we go. So let's see here. What was I saying? Oh yeah, Bitcoin under a little bit of pressure, and it looks like now here after this news, the dollar on the rise. So that's where we're at. Okay, there we go. I think I got this all sorted. Well, so we are seeing interest rates rise back up. Good morning, T2 LFT trader. I forget what LFT means. I've certainly heard that acronym before, though. Low frequency. So you're swing trading? There you go. Okay. Yeah. I'm wondering here though. So what I was gonna say is that we certainly had a regime change coming off of last week with the CPI and a bunch of other big risk events kind of passing and so forth. And since then, you can especially, I think that the equity traders have been feeling it the hardest, where it's like the NYSE will open and it just chops and it just dices you to pieces. It just goes sideways and it's like, it feels like it's impossible to trade, right? And I'm kind of sitting here like, okay, so is that the new regime, or is something going to come in and kick us out of it? Because one of the things that I'm seeing is that like some of these strategies, like especially momentum strategies, had like huge moves last week, and it's a little bit too much. So I'm kind of on the lookout here for something that would kick us out of that and inject a little bit more volatility back into the market, saying, no, you've gone too far. So when I'm watching a move like this, like retail sales, like that moved it a lot, right? But look at the interest rates. The interest rates are already like they retraced it and are already kind of like being well, we don't think that interest rates can go too far. Although look, the 10-year is apparently showing like a huge spread. Inject volatility back into the no. What I'm saying is that like, okay, so let's come back to here. Maybe you can see it here on this chart. Okay. So look at this chart. Okay. So you're right. We've been crazy volatile. Okay. So like when you look at the average volatility, okay, we've been up at like 2% moves, right? 2.5. And we even had a day that was like a 6% move in the ES. Okay. Crazy volatility days. But look at the volatility since then. We're getting 1%, 0.8%, right? And when you look at like the actually I didn't want to minimize that. I just wanted to switch tabs. Okay. When you look at the chart itself, like look at how tight it is. Like here, this was like what, Monday? It's just like it went nowhere, and it wasn't until after lunch basically that the markets went off and did something, and then even then, like they gave it back. Here yesterday was a little bit better. But like here, like this didn't happen until much later, and again, it had all to do with like the Ukraine thing. If it wasn't for the Ukraine thing or Poland, we maybe would have stuck in here. So like it's trading really tight. And then you look at like how it reacts to news. So for instance, PPI, pretty big news event, big jump up, and they retrace it. So like it doesn't go anywhere. And I'm already seeing hints, basically, is what I'm saying, is that I'm already seeing hints here off of this retail sales that it's doing a similar sort of a thing, that anything good comes back because it just reduces the volatility, and it just makes the market makers long gamma, essentially, right? Is what I'm seeing happening. Like there's been a very clear regime change shift, and the most clear result from that regime change that we've seen so far is a severe decrease in volatility, especially at the beginning of the trading session when we're around, right? So is the beat in retail sales good or bad? Yeah, so let's look through that a little bit better. Okay, so I see retail sales month over month 1.3 versus an expected 1, and core retail sales month over month 1.3 versus an expected 0.5. So that's I need to come over here and look. That is a relatively large beat, isn't it? If I pull this down, no, we have Williams speaking at the top of the hour at a Treasury market conference. That one might be significant. We'll just keep an eye on that. And then we have capacity utilization in industrial production in 45 minutes. So when I come in here and I look at the graph of core retail sales, and let's kind of like take out the pre-pandemic period. That's not the biggest beat that we've ever had. There was a beat in February that was like way more, but it's the biggest beat that we've had since February. So it's a relatively large beat there in the retail sales. Let's come over here and see if we can get any kind of commentary of people going through the numbers. Okay, here's one that I key piece of news that I think we should pay attention to too. Target tumbles after cutting guidance, warns customers are pulling back on spending. I think we kind of got the same thing from Walmart yesterday too, right? Except for that Walmart did well. War threat fades. Crude prices jump after Israeli tanker hit by Iranian drone off Oman coast. Man, it's just inevitable that something's going to happen in Iran, isn't it? You can't go around doing these kinds of attacks. They're not going to just sit and take it forever. Okay, but that's most of the news that we got. So the beat in retail sales, I would say, is overall is bad, but I'm also kind of wondering if it really matters. Like clearly, if the retail sales were good in the past, that's clearly not the trajectory that it's going to be on for the holiday season based on everything that the retailers have been saying to us, right? Like Amazon is bracing for a bad holiday season. Target is bracing for a bad holiday season. Walmart, Walmart sounded relatively upbeat, but they're still concerned that people are pulling back on spending. So I don't know if these retail sales numbers, retail sales is typically a really good forward leading indicator, but I'm kind of wondering if the market is saying here, not so much. The other thing though here, when it comes to the treasuries, at least, is that we did have a pretty decent move overnight. This is kind of like retracing inside of that up and down area that we did overnight. So it's again, it's not like a significant move, right? It's just within the noise. Leave a like for bad earnings seasons, guys. Well, man, the earnings season, we're talking holiday buying season is what we're talking about. It's a bad holiday season. Could be. Earnings season though, oh my gosh, man, especially which one was it? Amazon. The Amazon earnings was like so bad because Amazon has been one of the companies that is just like remember that one day, I think it was in the first quarter of this year, where like the market was looking really, really bad. And then Amazon earnings came out and they were just like spectacular and completely saved the market. And I made the TikTok where, Jeffrey Bezos to the rescue. Oh man, right? Like, and then this time their earnings were so bad. They were so bad. Oh yeah, I totally forgot. So you want to know something else? NQ is up 10% in the last 4 sessions. Time to take a breather. Yeah. Well, like I said, the volatility is coming in, but that's where I'm kind of like, it went too far. So I'm worried that what could happen is all of the dealers start going long gamma, right? And then something happens and kicks them out of it. And that could just be in price a move that we would say is like, well, that's just a pullback and we went too far and it's like all totally expected. But like it really screws up a lot of institutional strategies because of it, because it looks to me like there's a little bit of excess in some of these strategies, especially in like the CTAs and stuff. CTA and momentum strategies. I don't understand the backtesting, how you test volume. When is high or low compared to other factors? I'm not a programmer. Okay, so first of all, a lot of the things that we talk about on this channel, when I'm saying like these are empirically proven behaviors of markets and things like that, like the proven market behaviors video on the channel, we know those things because of peer-reviewed studies, right? And usually in those peer-reviewed studies, like especially the square root law of meta order impact, the way that they discovered that is by being given proprietary data sets from banks. Like the banks had like the whole flow, like all of the data, and then they used that to sort out the meta orders and show what the behaviors were and stuff. Okay. Now, from our side, can we backtest volume? Kind of. So if you're just talking like overall volume, that's pretty reliable. But a lot of the things that we're talking about here, like especially for instance, cumulative delta, require historical bid ask prices, because cumulative delta is basically using an algorithm called Lee Ready. That's what the algorithm is called. You go and you look at cumulative delta and how they separate them out. That's called Lee. It seems like so simple, but apparently it was a big deal. It's called Lee Ready. Okay. And what it does is it looks at the current best bid offer and the volume, the price that the volume was traded at, to determine whether that order was a market buy or a market sell, or to determine which side the aggressor was on. Okay. And the historical bid ask prices that you get, I have found, especially in really volatile markets, to be not entirely reliable. So I've been doing some work on my own, although I haven't focused on it too much lately because my focus has been entirely on studying for a Series 65 exam. But I've done some work where when you are using data live, it records that information because the information that you get live is very reliable, so that we could better backtest that sort of a thing. But I guess the overall thing is that like the way that I tend to approach markets here is like, is there an informed trader involved or not, right? So if we just had news and the market is moving very quickly on news, then yes, you have informed traders, right? And the robots, that's why the robots pull for news, because the robots know that the informed traders will have the advantage on them in a short period after the news release, and so they don't want to put liquidity up because of that, right? So that's when you're seeing informed traders. So I look at it as you have a market where the market maker is dominating, and so the things that will be the most indicative of where it's going are going to be correlated markets and trading enough noise for the market maker. And then you're going to have periods where the informed traders come in and are involved, and that's when you're going to see a trend and it's going to move to a certain direction. Or you're getting large meta orders from an institution, and that's going to move in a certain direction. Okay. So I'm basically like, I'm way more interested in the periods when the market is going to trend, right? And so yeah, you should be seeing volume during those times. And in cumulative delta in particular, you should be seeing the cumulative delta pretty consistently going in one direction. Put call ratio is super low, so maybe a long squeeze. So I'm seeing a few tweets about Donald Trump announcing for his 2024 presidential run. So he did indeed do it. In the very beginning, I said he wouldn't run, didn't I? I said he wouldn't run. I guess I misunderestimated the ego. But you know what I find really interesting about that whole thing yesterday was there was like a real lack of interest. Even among the conservative outlets, frankly, even among the Donald Trump supporter forums, there was not as much buzz about it. Like, I expected to come into the Donald and after the announcement see like 2,000 comments and stuff like that, but it was just average size post. Maybe that changes this morning, over time. And then a lot of the comments were not super enthusiastic either. So it was like, I thought that Donald Trump announcing would be like this big firestorm, like the media would all be hitting on it and everybody would be all like up in arms and there'd be tons of activity about it. And instead everybody's kind of like, well, we don't, of course we don't like that, but who cares? They're not interested. I'm wondering now, just based off of that, if Donald Trump is going to fizzle out. But that was kind of an interesting shift I saw last night. White House economic advisor Bernstein, I wouldn't say inflation has peaked, but the trend is positive. Retail sales increased more than expected in October, boosted by purchase of motor vehicles and a range of other goods, suggesting consumer spending could help to underpin the economy in the fourth quarter. Oh my gosh, dude, the car market is so messed up right now. So I was looking at, because my wife, she saw a post in a Facebook group, and it was like a Honda Accord, and it was like a really crappy Honda Accord. Like it was a 2000 Honda Accord. Like, you really want a 22-year-old car? You're gonna pay $2,000 for a 22-year-old car? I don't know about that one. I don't know about that one. That's, especially like it doesn't even have paint on it anymore. It's just like, I don't think that's gonna work out. I don't know if that's worth $2,000. And so I went and I looked up my car, because I have an Acura, but it's like a 2009 Acura, and I really like that car. It has a good sound system. I've never had any problems with it, and it still looks pretty nice. It still looks pretty nice, even though I like busted the side mirror. So I could probably go and replace the side mirror is what I should be going and doing. But I digress. So I went and I looked it up, and the Kelley Blue Book on it was about $4,000, right? And she was showing me all of these similar cars that were like 2000 level Honda Accords, right? So like the older car that was 10 years older and was the lesser version, because an Acura TL is like a luxury Honda Accord. Well, I mean, it's based on the Honda Accord. They make a lot. It's not just like a slight modification. They really redo like the whole car, but it's the same base as an Accord, right? And they're the same price. Like what the F? Like the used car market is just like totally out of whack right now. I wonder if I had looked like 6 months ago what they would have been telling me for my car. Maybe I should have done it. Maybe I should have gotten out and I could have made like 8K, and then we could have just like made by for a few months or for a year with one car and then get back in with the, cheaper car. Because the car market is just crazy right now. I think I got spoiled by the Republican midterms that turned out to be a little wave. We haven't talked about that much. I think I kind of hinted on this a little bit yesterday, but I want to talk about that. Hold on a second. I need some water and stuff. I think I'm picking up this cold that my wife and kids have had. So hopefully that doesn't hurt my voice. Okay, so here's what I think happened. In 2020, a lot of states, because of COVID, shifted to mail-in voting. And the Democrats have been like, yeah, we love mail-in voting. Because the reality is that the Democrat Party, their general overall strategy, like I've said this before, when you really look at this is the way that they play the game, it can tell you a lot about what they're thinking and so on and so forth. The Democrat strategy is we're the good guys and we're super popular and you want to be on our bandwagon. They're always trying to utilize like bandwagon fallacy sort of things to entice voters. Okay. That's why you see, for instance, this whole thing is like, Democrat voters will vote Democrat regardless of like how bad their policies have been for them, right? So they come in and everybody can see that the economy is down bad. Joe Biden's approval rating is really bad, and I think that the public by and large agrees that the Republican on the economy has been better than the Democrats and so forth, but they still vote Democrat. And why is that? Because it's almost become like a religious thing, right? Because we're the good guys, and that's why we have to vote Democrat. Because me and all the other cool good guys, that's what we're doing, is we're voting Democrat. That's the way that they play that game. Okay, so for Democrats, they love mail-in voting because they can get more people to vote because they're interested in getting those people that normally wouldn't vote because it's just too inconvenient or whatever, and they're low information voter or whatever. But if they can entice, if the mail, if it's sent to you in the mail and all you got to do is fill it out and send it back in, right? They're much more likely to vote. And then the Democrats can like start calling you and stuff. They have your number. They say, have you sent it in? Have you sent it in? Have you sent it in? And they have all this whole infrastructure to get everybody to put the early mail-in votes in, right? Republicans don't do that, okay? Like, there's this whole thing. The politicians in general like the early mail-in voting because it helps them, especially an incumbent. This is why I don't like the early mail-in voting, is because it helps the incumbent, generally speaking. It helps the guy that has the most money and is able to put the most into is get the vote out effort, essentially. It's almost like paying for votes to some extent. I mean, they're not paying for votes, but you get what I mean. It favors the wealthy candidate, okay? But the Republicans, especially in some of these, like Arizona, for instance, were like, no, we don't like that. We're not gonna, because they don't like mail-in voting and they didn't want mail-in voting to begin with. They didn't take advantage of the mail-in voting at all. They told all of their people, go in on election day. And that created a distortion, because basically what happened was, if you go back and you look at the polling, let's see if we can come here. Real Clear Politics, I think, would give us one of these. Maybe Senate. Actually, let's just go to like top. Okay, so let's do Arizona governor, for instance. Okay. So when you look at Arizona governor, right, the Real Clear Politics average suggested that Lake was going to win the whole time. But look at this little time period here at the end. Do you see that? I don't know. Can I like zoom in on it? Maybe I can just put a circle around it. You see this period right here, like at the very end, where the support for the Republican goes up and the Democrat goes down, right? It was stable. It was stable right in here for a long time. And then there was this divergence, right? And then how did the election end up coming out? It came out right here where it had been the whole time. So what actually happened was the polling got screwed up by the early voting. Basically, when all of the people had come in and early voted already, and so the people that were left to vote were all the people that were likely to vote on election day and were Republicans and so forth. And so the polls were showing this late momentum, but basically by that point, it was already too late because the Democrats had already built up too large of a lead in the early voting. So that's why the Republicans fizzled out. Essentially they performed what they should have, really. So that's kind of an interesting thing, because one of the big questions is like, okay, is it Donald Trump that's holding us back? Is it early voting that's holding us back? Was it Mitch McConnell not spending the money in the right place, et cetera, et cetera, et cetera? And I think that a lot of the evidence suggests that it wouldn't have mattered what you had done. I mean, if they had picked better candidates in certain races, then it certainly would have been better. But I think the reality is, like, in terms of like the, how many people are Democrat, voting Democrat, and how many people are voting Republican, the number of people that you can actually pull over is not very much right now. Like, in order for the Republicans to have the kind of like transformation and sweep that they want to have, they have to like break the spell, right? Although I think some of these things like FTX, for instance, I think that FTX is a good opportunity to come in and break the spell, right? Or any kind of like major scandal on the Democrat Party to say, like, look, they just care about your freaking money. And they were willing to, they basically promoted this business in the freaking Bahamas, and millions of people went and put their money into it, right? Is it smart to go short now on the treasuries? It might be. I'm kind of looking at it. So right now I'm seeing enough autocorrelated volume to the long side that I'm hesitant to try and stand in front of it. There is a strong bid at 26, and that seems a little bit suspicious to me. The day will come that the mail comes already checked in Democrats, and you just have to. I mean, it's pretty close to that already. I really don't like mail-in voting. I really don't. I mean, just the fact that we're coming in and it's been like more than a week and there's still some of these races undecided is just so ridiculous to me. Right? The more time that goes by, the more opportunity you have to do something shady. We should just know. We should just know on election night. And that means that you shouldn't accept mail-in votes after election day. Like, if it didn't make it already there, then it doesn't count. I don't get the whole ballot without faces thing. Yeah, because anybody, well, you have to put your signature on it and everything, but yeah. I think you should have to vote in person, and I think that you should have a voter ID. And who runs the post office? A bunch of Dems, yeah. Well, it's crazy that you get these things where it's like, oh, we found another batch of votes that somebody had just left in the office and brought in, Okay. Well, this move in treasuries is extending now. That's a little bit more than I thought it would be. I'm wondering, did I miss something? I think I did. Well, so first of all, I know I have my news squawk turned on here. Let's turn that on. JP Morgan economists, we anticipate mild U.S. recession in 2023 on Fed hikes. The U.S. could shed over 1 million jobs in a recession. The effective federal funds rate, 3.83% November 15th versus 3.83% November 14th. JP Morgan sees Fed cutting rates in 2024 to 3.5% by year end. I'm just saying, The mail has been around for hundreds of years, guys, and mail-in voting wasn't a thing until now. There's a reason that they didn't do mail-in voting until now, okay? And having been in a state that has been doing mail-in voting earlier than practically everywhere else, okay? Because Utah is a unique situation, right? Utah is ultra conservative, and so the Republican establishment candidates like benefit substantially by having mail-in voting as such, right? Otherwise, the upstart conservative people always win in Utah. So it's only their money that keeps them on top. And so we've had mail-in voting in Utah longer than everywhere else. And I'm just telling you, I don't like it. And it changes the outcome of votes. It does. Like think of it this way. The politicians wouldn't want it unless they thought it changed the outcome. Whether that's because different groups of people vote or there's fraud involved or who knows what it is, there's a reason that they like it. Changes the outcome. Absolutely does. It's the same with all of the attempts to get rid of caucus systems and expand how primaries are chosen, right? They intentionally change those rules to be more favorable to the establishment candidates. They don't make a change unless they think it's going to help them. It's the same with the Republicans. The Republicans want voter ID. Why? Because they think that it will change the outcome. So that extension there was a little bit more than I thought we would see here. It is being pretty, I don't know. The whole thing is that the cumulative delta, so we're about 12,000 plus 12,000 on the 10-year in volume since we bottomed after the retail sales news. Also looks like what I'm seeing here is like the dollar's getting stronger and the treasuries are getting stronger. And I'm not seeing the same like correlated movement in the treasuries over here in like the 6J or gold. Oil continues to move down. Like oil took a big step down and treasuries moved up. And on this move, I would say maybe we're seeing ES down and treasuries up is the strongest correlation that I see at the moment. So it's like the treasuries are doing something of their own, and I'm not quite sure what is the driver. I'm not sure what the driver is. So I'm kind of looking at this like, well, this would be the spot to go long, I think. Or sorry, if I want to go long micros or short the main treasury here, I think that this would be the spot. But I don't want to trade against, that would be trading against possible informed trading, so I don't want to do that. To get some more, let it wait a little bit and get some more signs that it's going to fizzle out. Hmm. I'm trying to keep an eye on this here in the treasury. It does look like they've maybe reached a liquidity hole, and I'm not quite sure where the market volume has shifted here. It looks like it's still long. How to know if studies are faked? I mean, get paid to get some result. Well, because you can go in and so first of all, this kind of a study that we're talking about is a little bit different from like your ye olde medical study. So like when you have a medical study, they'll have like something that they want to say, like does eating X thing harmful for you? And maybe there's the industry is paying for it because they don't want people to think that eating that thing is bad for you. So then they'll go through and they'll do the statistics, and they'll build their model and their statistics in a way in which it shows that it's not bad for you. They hide it or something like that, right? That's the kind of studies that we're talking about here. They're going to come in and they're going to say, okay, we think that the market works this way. So we think that the market is has strong autocorrelation in order sign because traders mimic each other. They see the trend and they try and jump on the trend. And then they'll build a model up. They'll say, okay, so this is the kind of model that we would see is like the one that when this one person trades, then that could induce a certain number of other people to trade in the same direction. And you have this diffusion model, or I forget what they call them. And then they go and they look at the market data to confirm the evidence. So you should be able to go and look at that same market data. They usually don't always post like their exact data set, but you should be able to create the data set yourself in many of these instances and go and confirm that the market behavior actually happens, right? And a lot of these studies are like, okay, here's the model, and then like you'll see like 5 different researchers run it on different data sets that they had unique data sets that they had found to confirm or deny the particular claimed market behavior, right? So it's not just like, oh, we went and we looked at it and it seems to behave this way. It's like they're starting with a mathematical model. Like they came in and they said, okay, here's this thing that happens in the market. This is like the rules of the market per se. And then when we do all of the math on it, it says it should come out this way. And then you go and you look at the market and they say, is that actually what happens? Yes or no? And that's kind of how we've gotten to where we are. Yeah. So I would say that these studies are highly reliable. And the thing is that like people make money off of this, right? Like these researchers, it's not like, so like in the medical field, for instance, like the researcher being the researcher, like that's as far as it goes. As you get to the top of your field, you get the PhD and you're the medical researcher, and then you're just a medical researcher and you get paid to be a medical researcher, right? It's different in finance. In finance, you when you put out the big study or you discover something big, you start a fund or you get hired by a bank or something, right? Like people are actually using these and making money off of this. I don't either. Not sure to make what to make of this U.S. Treasury rally. Also, I think trend is after the fact. Traders see the trend when the trend. Yeah, it did. It does. Well, I guess the thing is that if I'm expecting a trend, then it doesn't take me very much to see confirmation that that volume is coming in the direction that I'm expecting and try and jump on it early. Otherwise, it's like by the time the trend is confirmed, it's already too late. Although in this particular instance, because we were looking at 375, it's already down to 3.735. So I'm not sure what is driving this flow. It could be the comments that we had gotten from JP Morgan seeing a recession. I think that the timing on that was about right. The timing, like we had that, like we pushed down, right, and then we had a push back up to about even, and then we started to see like more strong volume and like really strong trend coming in, and that did seem to coincide with when I saw the stuff about JP Morgan on Twitter. So maybe that's what's driving it. Either way, it was not my expectation. So we continue to see a market where I am just not, I am behind the curve, right? So good for us. We've haven't lost any money from it. Right? Although I wonder, well, okay, so 113 even is going to be a spot apparently. My guy at JP Morgan says this isn't them. Well, it's not JP Morgan, it's all of JP Morgan's clients, right? It's all of their clients that read that research report and go, oh, I want to go short treasuries because they're at 3.7 and they say that by end of 2023 it's going to be 3.5. I want to make my extra 25 basis points now, right? Yeah, it's good observation. Really big order there in the 5-year. Oil is getting creamed here, man. What is going on with oil? Well, I guess it's only down 2.5% so far. Bitcoin also looking a little sad. I think one of the things that's making me the most skeptical at the moment is that gold is not moving. If anything, gold is pointed down at the moment. So either there's something fishy going on here, or gold is going to shoot off in a second. Nah, so we are seeing some pushback in the volume now, so. If we wanted to go for a second leg, I think that I would be looking, like if I wanted to go long on expecting another leg higher, then I would be looking for a good spot somewhere along here. But the pullback that I'm seeing and everything else that has me a little bit skeptical has me kind of like wary of taking that trade so far. I need to keep an eye on it because I might be forced to take a trade here, right? What did I say when I last mentioned oil. What did I say? Was it 80? Well, it's 84. It was low. Low so far is 84. It's pulling back a little bit, but low so far is 84. And treasuries did seem to fall back to this 30 area. So they had built a little bit of a liquidity hole here and then extended a little bit further and now have come back into that. So that could be this trade that we look for sometimes, where it's like we think there's a liquidity hole and then it comes back through too quickly and gets sucked back in. Maybe we could have taken that reversal. I don't know if, well, I think so in this situation, like if I can get 10 bucks, I think that that's fine. I also think, given the situation, probably we want to be using a limit order here. Yeah. Actually might have given us an opportunity right there that we just missed. Donald Trump Jr., since it was Ukraine's missile that hit our NATO ally Poland, can we at least stop spending billions to arm them now? No. Probably not. I do think that whole situation, that the most likely explanation was that it was a stray missile from Ukraine trying to shoot down missiles coming in from Russia. That's kind of ironic. Especially, like, the thing that really bothered me about that whole situation was that the way that Zelensky reacted to it was, I felt a little bit reckless. It's like he's desperate to try and bring NATO into the conflict, and I that really rubbed me the wrong way. That's all it took, huh? Yeah, I just... There was no, like, everybody else was like, okay, like, let's chill out, let's look at the facts, etc. And Zelensky was like, see, look, they attacked you, you gotta get in, come on, now right now. I really did not like that. I really did not like that. I mean, I know I'm just touching the headlines and like I can't read his mind or anything like that. So like, let's not take this as like some big judgment on his character or anything like that. But what I saw, I didn't like. That's all. Well, I mean, so the thing on is Zelensky, because I that's one of the things that I see on the right and like the Russian support of it. I think that you have to realize in a country like that, to get into a place of power, there's, you know, there's always going to be powers that be that are corrupt boosting you, right? For sure. That's always somewhat the case, right? And you know, if you're a leader in a country like that and you want to help your people out, you kind of have to be a pragmatist about it. Okay. So you got to give them a little bit of leeway there on that. Right. And like the whole thing is that what Russia did was not justified anyway. Right. Screw Russia. Yeah. Does Ukraine have that much lithium? Power and corruption go hand in hand. There you go. Yeah, but I think that this has far more to do with screwing over Russia than it does anything else. Right? Like the whole thing here is we want to show that Russia, that if you try and do something like this, you're going to get screwed, and kind of send a message to any other country that tries to do this sort of thing, right? Holding international norms. I think that's what it's like. Nah, I don't think it is. But I don't know how much lithium is in there and how much it's actually worth and all this stuff, but okay, we're getting a little bit of a decline here. Seems like they're able to hold the 30 area pretty well, though. I'm trying to think about how we want to take where we want to take this conversation, because there wasn't really any point behind my comments other than I didn't like how Zelensky reacted, but you guys are trying to turn it into something else, and I'm not quite sure where we want to take it. People really care about peace and prosperity, democracy, bald eagles, and legitimate votes. No. Like, so take a step back for a second, okay? If the United States and the Western countries had said, sorry, Ukraine, I guess you're on your own, and just watched as Russia came in and took over Kiev and all that. Like even before Russia invaded, they'd said, well, we're not going to give Ukraine weapons to defend themselves against Russian aggression, even though we know that Russia is what is the word, posturing, even though Russia is posturing like they're going to invade, we're not going to help you or anything like that. Or if we said that same thing with Taiwan, right? It's like, well, we know that China wants to take you over, but we're not going to help you. Sorry, you're on your own. Good luck. Can you imagine the geopolitical world that we would be in if that's what happened? Like seriously, just think about that for a second. Every country. Well, that turned south on us very quickly, didn't it? Shit. Why do you think you have to be the police of the world? Because the world would go to shit otherwise. Man, that sucked. I almost got filled, and then it just came back on us really hard. Maybe I need to go the other way. I don't know. I don't know if there's opportunity in it here for me now. Well, good deal. It was only 9. World is in perfect order right now. I must have missed that. Okay, but just think about all of the places in the world where one country would really love to be able to take a part of another country, right? and they have the power and resources to do it. And why do they not do it? Because the United States will step in, because the United Nations will step in, etc., etc., etc. Okay? If you come in and you say, hey, okay, yeah, well, sorry, Ukraine, you're on your own, right? What message does that send to Russia about Poland, Lithuania, etc., 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 right? They're just going to keep going. Like, seriously, it's just to say Russia wants this, we should just let them have it, is like a really, really big tactical blunder, in my opinion. We'll give away Taiwan too. I hope to God not. That would be an absolute effing disaster, right? So and then here's the other issue, right? Is part of the United States power, right, is because of the relationships that we've built. I think some people have been lied to. Everybody thinks that the United States has so much power because we have the biggest economy and we have the best technology and all these sorts of things, and nobody can do it. I'm telling you, you can have all of this technology and all these things, right? It's very difficult to project power around the world to the other side of the world, right? How do you do that? You have to have partners. You have to have partners. And what happens if the best partners that we have, the ones that need us the most, and then we say, oh, sorry, China wants you. Well, there's nothing we can do about it. We're not going to get involved. Right? Who would trust you? Who would trust you at that point? It's absolutely crazy talk. Like when I look at like conservative geopolitics, how much further do you think that this thing is gonna go, guys? I'm a little torn here. I think that I need to just stay out for a little bit. Let's wait like 15 minutes and rant about geopolitics. Okay. It's just nobody would trust you if you started to take that run. So like the conservative approach to geopolitics, generally speaking, I think people would say it's we shouldn't get involved in foreign conflicts, right? But I don't think that actually is the conservative geopolitical position. I think that the conservative geopolitical position is that our relationships with our allies are the most important source of American power, geopolitical power, and that we need to maintain those relationships, and that we should get involved in conflicts in situations where countries are trying to change the status quo on that. Well, here's the ES Open. This move, so hold on here. My Ninja Trader's slowing down a little bit here, guys. It was at 7 o'clock, and then we just had another move just like a few minutes ago. So they only waited 30 minutes and then went again. That's unexpected. They're really that anxious to get long treasuries, huh? Have to go back to like daily charts to like try and get an idea of like well, I do see something at 07.5, but we're kind of to the point on the long side where it's really hard to know how far this would go. But we've already seen about 25,000 contracts long. Yeah, Lucas says I didn't see it, and I didn't see it coming. I'm still thinking it's got to be the JP Morgan thing. Does that mean that it's going to trend all day? I don't know. I guess when we came in here, I was kind of sitting here saying like, dude, be careful. Like there might see something come in where they break out of the volatility. I guess it was just the opposite direction that I was expecting. They came in and the treasuries trended up. Strong trend up though. Yeah, and to the point about the United States being trusted, I mean, like the decisions that we've made over the past 2 years, or let's even say the last 5 to 10 years. Yeah, are you, if you're Taiwan, are you more or less confident in your ally coming in and supporting you today? Probably less, right? If you're India, like India is like a really key one. It's like, because Indian really should be allied with the United States. I really think that the people there and their kind of principles and stuff align very well with the United States. and many things about the culture align really well with the United States. It's a really big loss to see India at the moment allying itself with China. And why would they do that? Well, I think that it's because they think that China will have my back and America won't. And it really bothers me every time people come in and they say, well, we should just leave them to their own thing because we don't want to get involved. I'm concerned about how we're spending the money in Ukraine. I feel like you just keep writing them a blank check and who knows where it's going to. Okay. But I think that you need to help them. I think that I don't think you want to live in the world where the West doesn't help them. Well, still pushing. FTX can help you with that. So I have yet to see the proof or the evidence that the money was that Ukraine gave FTX money. Like I think that they had some sort of a partnership with FTX, but I don't see anything that says like Ukraine gave them this much money and all those sorts of things. It didn't happen. So you can't prove that it happened. It's a conspiracy theory. Right? People are taking a very kind of tentative connection and turning it into this big corruption thing. I have proof. You never will. No, you should be able to look through their books and have proof. You know what's crazy about the FTX thing though? Is like, so they got the guy, right? He was in the Bahamas and they stopped him in the Bahamas, right? They stopped him in the Bahamas. And then they said, "Oh yeah, they want you in the United States for questioning." I'm sitting here like, really? Like, really? After all that happened, and we're still just too like, well, we just want to talk to him? Are you effing kidding me? How is he not already being charged with shit? Like, what the fetch? I'm greatly troubled by the state of regulation in the United States. I thought that having a Democrat coming in, and Gary Gensler said a couple of things that made me hopeful that maybe they would try a little bit harder, but it doesn't seem like that's what actually happened. Seems to me that Gary Gensler was a complete useless dud. I mean, if you let FTX get away with that, then there's no reason to have regulation. Like seriously, if Sam Bankman-Fried doesn't get the book thrown at him, then what is the point of financial regulation in the United States? It's just ridiculous. No, you have to have like a direct piece of evidence to support the theory. See, this is how a conspiracy theory starts. Is the thing that I think would be the most nastiest and would be best for me politically would be if we could prove that money was laundered from Ukraine back to the Democrat Party, right? So then that becomes like a thing that happened, even though there's no actual evidence to support that did actually happen, right? So why do we think that they happened? Because our political ideology wants it to have happened. What happens when no one wants you to see that evidence? It doesn't mean that the theory is true. Right? Especially since like seriously, where are you getting theories from if you don't have some evidence to support the theory in the first place? Right? That makes no sense. It's like if I came out here and I said I think that Uzi owns a cat. Why would I think that Uzi owns a cat? That makes zero sense at all. I have absolutely no reason to think that he owns a cat. But maybe if I like Uzi and I like cats, then I might want to think that he has a cat. Right? There's no direct evidence that Uzi owns a cat. I'm Oh, he does own a cat. Oh, see, I was right. You see, guys, sometimes the conspiracy theories are right. You should take them more seriously. Do you see how that works? Right. like here's the thing, is that if Ukraine gave millions or billions of dollars to FTX, right, then it would be a very bad thing for the Democrat Party, for sure, wouldn't it? That would be like really obvious corruption. Okay. So Republicans should do everything that they can to look, right? Right? Like, you might not have a legal right to look at. Like, you might not have something that allows you to get a subpoena, right? But there are things that you can do to try and help that process along. They should absolutely be digging, for sure. They should absolutely be digging. But it just doesn't necessarily guarantee that it's going to happen, because we don't really have any evidence. And the thing is it seems to me that probably did happen, and everybody is running around saying it like it was a fact, and we don't, and it's not proven. That's what bothers me about it. Same reason there's no body cam footage of the Pelosi attack. My theory on that one is still that he was more concerned about what the police would do to the guy than he was about anything else. This is coming back hard, man. Is that a Trader Analytics and live account, or were you seeing my thing? Did I have that? I just had that pulled up for a second, didn't I? Yeah. Because I took one trade and I lost $9 on it, but I was looking at what was the price that I had gotten in at. Is it back to that price yet? It's not. Yeah. But that only shows you just like the one trade that I took today, right? There does seem to be a little bit of a disconnect between the rates and the actual treasuries here. I don't know. The problem that I have here is that I still feel like I have to take a long rates trade, and I don't know if that's the right trade, right? Small loser, that's fair, yeah. There's definitely something going on here. Bank of England is speaking. We are likely to raise interest rates further. Who's the speaker that we got coming up? Aneta. Oh, no. You're speaking about Williams. Williams we should be concerned about for sure. Oh, I thought that one had already happened. Okay, go. I remember now. I don't know if the Fed speaker speaking is completely enough for me to not want to take a trade, but I think at the moment the reason why I don't want to take a trade is because we just had like a really strong impulse up, and the movement that we're getting right now is probably more just the post-meta order impact sort of a thing. So that does not necessarily suggest... Well, it looks like maybe they're going to force my hand here. That does not necessarily suggest another meta order coming the other way. Well, okay, that was a good fill. I am getting signs of a meta order coming the other way, though, in the volume. And if that is what we're getting, that would be an optimal situation. Is a strong meta order coming in immediately after a really impulsive move up? That's the one that's going to come. Those are the ones that could run a little bit, right? Are you enjoying micro? Oh yeah, I got to tell you, Lucas. Just the change from like being able to trade treasuries, but with such minimal risk, really helped my trading. It really helped my trading. It's a lot easier for me now because like when you get a big move and you're losing money on it, it doesn't become do or die. It's just like, oh, okay, I lost money. I guess I just quit today. It'll be fine. You know, I'll make it back tomorrow or whatever the deal is. It's helped a lot. And you know, of course, the market overall has helped a lot too. The market overall has been helpful, right? There's been volatility in the markets. There's been trades for us, especially on the informational inefficiency side. So we should expect to have done well this year. And I think it took me a little bit of time to get geared into it, but I've been making money. I've been making what I was aiming for, at least. So big move in micro UST is 1 tick in ZN. So if you want to compare the two of them, it's probably like 1.5 to 2 ticks. So like 1 tick in ZN is 1.5 to 2 ticks in the treasury. But really the way that I would put it is more like this. In the ZN, like an average rotation is like 4 or 5 ticks, right? In the 10-year, average rotation is 1 basis point. So $10 on one contract. That's about the regular size of a move that you get. Of course, we've been getting all of these moves where like in one day it moves 20 basis points, but so what I'm getting at though is that I'm realizing that a lot of the ranges and where the ZN goes has a lot to do with actually the rates. And because they really one of the strongest proven technical behaviors that we have is that there tends to be more liquidity and more trade at round numbers. And basically what I'm starting to discover is that the round numbers in the rates probably matter more than the round numbers in the actual treasuries. Does that make sense? Well, Newsquawk was pointing out that the equities are not looking so hot, but when I look at it since the regular session, it looks like mostly chop still to me. No. So like a big move that's it's hard to say like how far each of them are. I'm saying, you know, like in the old days, we were like looking for a, you know, maybe a 4 tick stop and maybe a 4 to 6 tick profit in ZN, right? So if you want the equivalent of that in the micro treasuries, you want 10 ticks, 1 basis point. And you can basically sometimes utilize the round numbers and the yields to your advantage as like good places to get in at. Okay, so there was some pretty strong downtrend. It's kind of moderated here. They tried to make an attempt on the upside. There wasn't much juice in it. They've come back. See where they go from here. It might be a little sluggish here now. Oh geez. So I'm afraid to kind of talk about what I just saw here on Twitter, but I'm going to talk about it. So Stephanie West, Michael Berry is responding to Stephanie Westland. She says, one of the teachers at my daughter's school started wearing a mask today. Can you guess what happened next? More than half the kids in her class asked for a mask too. Our actions matter, mask up. And then Michael J. Berry says, oh, it says a lot more than that. And I was seeing stuff from my political blogs about this. The suggestion that now that winter is coming along, that the masks are coming back. And I really don't like wearing masks. At this point, I don't even care about the science. I just don't like wearing it. Ugh. One tick in Xenon on the current OTR is 16.6 basis points, so that's all really. So don't wear one. Well, hopefully because I'm in Utah, I won't have to, but unless I'm at the doctor's office. But Uzi, people will start. No, they get pissed off. They force it. They force it on you, man. Listen, I'm not about to throw a fit to try and to not have to wear it, right? That's the problem, right? Is that the people that don't want to wear a mask, they're not willing to risk anything or you know, cause a commotion to not wear it, and the people that want people to wear masks are willing to make the commotion. They don't even make you wear them in the hospitals down there. Trying to think of the last time I was in the hospital. Well, when Ethan was born in June, I don't remember wearing a mask. I've been spending the majority of my mental energy coming up with cutesy names for my kids. Because I thought, okay, so Asher, we can call him Asheru. That's what I call him, is Asheru. And I was like, yeah, but none of those cutesy names work with Ethan. Ethan is just too of a, you know, name. But if you start and you say Anne, any word that has Anne in it, and then you can combine it with Ethan, it just opens up a world of creative opportunities. For instance, I think next year for Halloween, you know, we paint his head purple, give him like, you know, lines on his chin and stuff, and he can be Ethanos. You know, like from the Avengers, Ethanos. Or I call him Ethantastic. Ethantastic. See, the possibilities are endless. I just broke a rib cringing. That means that it was effective, right? That means that it's an effective pet name. That's what that means, right? Lucas, you mean people feel entitled to ask you to wear it even if it's not required by law? So, what it will come down to is the place of business will ask you to wear it, right? So here in Utah, a business unlikely to ask you to wear it unless there is already like some sort of a mandate. Like the Salt Lake County had a mandate at the peak of the pandemic, and they were arresting people if you weren't wearing masks, which is crazy. I don't know if they'd be able to get away with that now. Seth, why aren't you talking? Why aren't the talking heads on CNBC freaking out that the 10-year is down 60 basis points in a week? Has the Fed said anything? Has it really been 60 basis points? It hasn't been 60 basis points. We were at 4.2 and now we're at 3.73. So that's like 40 basis points. Okay, this is getting a little frustrating because when I got in this, the 10-year was like at 113.02. So am I getting steepening here? Yes, I am. Not helpful. Well, I don't think that you freak out about it because like the whole thing is the market is really happy about it. That's why they're not freaking out. I tell you what, the empirical research suggests that, you know, the entire basis behind technical analysis is that these are tendencies in people and that it's people's psychology that you're reading and that psychology plays out over and over and over again. And the empirical evidence suggests that people are really actually quite random, especially at like a large scale like that. But there is one thing about markets that is extremely well proven that can only be explained by the psychology, I think, and that is that humans care more about the losses, right? So when it's bad, when the S&P 500 is going down, everybody panics and you get all of the volatility. But if it's going up, they don't freak out. They don't freak out, even though to us it's like, but that means we're going into a recession, right? That's the way it is. And let's be honest, even though for the past 6 months, the treasuries have really been like in the spotlight in the markets and the one that's really moving, the media hadn't really picked up on it too much because the retail traders don't care about treasuries so much. They should. They would have been a really good oh man. Going back to the beginning of the year, if you understood what the treasuries are doing, you could have called it all perfectly, huh? You could have played the year almost perfectly if you were, I mean, I wasn't so smart, but if you were a good asset manager and you really knew like the right assets to play with it and you were active, the treasuries would have told you what to do, right? But it seems to me that all of the equity traders kind of were like, nope, I'm not seeing this. I'm not seeing this. The interest rates aren't going up. They can't go up because then we can't pay the debt. There's no way the Fed could do that. Well, it happened. Makes no sense. They love it going up in the same time saying big trouble ahead. Well, okay, so here's how you explain that. Is the markets are forward looking. Okay, so don't make the mistake of thinking that like the current price is fully reflective of all available information, but the general way that things move is that the low in the stock market is going to come well before the low in the actual economy, right? So what you're seeing here is the interest rates backing off and the economy, or sorry, the stock market reversing and kind of buying up in anticipation of the economic problems hitting people and people pulling back on spending and forcing in economic stimulus, right? So the market is like basically this market is trying to trade like 3 months ahead is what's happening, I think. Yeah. Markets reprice when there's a change in future expectations, right? And how does that mechanism work? Well, it's because it's the orders that move. So when we get a piece of information that suggests a change in future or that changes our expectation of future fundamentals or order flows, then people submit orders and move the market. And that's how the market ends up being ahead. Right. But the problem is if you're the regular person, right? I think that regular people have some reason to be concerned at the moment. Okay. A lot of tech workers are getting laid off. I think even in my industry, because I'm in healthcare, could get rough. I think that my company's got some stuff that they've got to do this next year that they're not going to be laying anybody off, but could still be rough in our industry. We getting, what is the news that we get here in a moment? Housing market index and business inventories. It's probably not a good idea to be in a position at the moment, but I think it's might be a little bit too late for me to do anything about it. So I just have to cross my fingers and hope it works out. Okay, the housing market index was lower than expected, 33. Market doesn't seem to be reacting to it, though. Yeah, you're totally right. That's exactly what happened. Well, I think that the market had actually kind of priced that in largely before he said it. At least the treasury market had. I got to tell you, a lot of the FOMC meetings as of late have been really like perplexing to me. I keep looking at it and I'm like, are the equity traders that out of the loop? This is like nothing that he said here today means anything, or is it's all the same stuff that he's been saying. And they're like, but he's super hawkish. It's like the number of hawkish words he said versus dovish words, and that's the way that they trade it. And it just ends up being noise. Because look at what happened with last FOMC meeting, right? You end up getting in short on the treasuries on the FOMC meeting, and then all of the data points came in, and the CPI ended up being lower than expected, and you got screwed if you stayed in that position, right? Like the FOMC meeting gave you like the exact wrong signal about what was coming next, right? I feel like that it was pointless to try and make a trade off of the FOMC meeting because there wasn't actually any change. Like there's volume, people want to trade on that day. It's like the traders come in and they're determined to make some sort of a trade, and so they make something happen. But there was nothing said that changed my expectations, you know? Well, it seems to me like there is quite a bit of churn in the treasury right now. Like it is ticking up and down quite a bit. There is a decent amount of volume coming through. I'm not seeing like huge trades here, but it's just, you know, like 300 at a clip coming through, but it hasn't really gone anywhere yet. And in particular, when you start getting the downticks, the offers aren't very firm. The last 4 Fed meetings gave me the impression that it's more noise than CPI because CPI can really change expectations on what Powell's going to say the day he actually says it is. Yeah, it's true. I think you're on the right track. I mean, a Fed meeting can come in and like be really impactful. And I think that part of the reason why we saw such a huge move last Fed meeting was because people were expecting a significant change from the Federal Reserve. And like the thing that was crazy about it was that we did get the change that we were hoping for in the statement, but it just wasn't backed up by anything that Powell said in the press conference, right? And so that led to excessive volatility because of that, right? And I think that December meeting could have a similar kind of an impact. Does that make sense? Like we're still in a kind of a transitionary period, and so there's going to be a lot of anticipation around what Powell is going to say in December, and so there's going to be a lot of options positions and volatility around it. The difference being, though, that in December maybe he actually does say something that really shifts people. It really shifts our expectations, or shows that the Federal Reserve has shifted their expectations, right? It's perfect for the big traders and sell into a lot of noise. That's probably true. So while I've been saying that, like, the treasuries have been ticking around a lot and there's a good amount of volume coming through in here and everything, it's kind of looking to me like this kind of counter move that I was looking for isn't actually happening. It's looking more to me like whatever was the buy med order is in and done, and like it's not doing anything anymore. We did see gold move a little bit lower. When did that happen? Yeah, that happened when the treasuries made that last push up. I'm wondering if that was related to oil, though, because oil was the thing that was really moving at the time. I'm starting to get less hopeful, though, about a move, because I can see that I'm not really getting very strong offers, but I am. So like when it ticks, how much do they put on the offer? And then I'm not getting very many strong ticks on the downside, but I am on the upside, right? See, like it ticked up there almost instantly 700 versus on the offer, it took over and over and over again. It didn't happen. It looks like it's still able to move around quite freely in this area. So I'm not sure if we're gonna get like a breakout or anything like that anytime soon, but it's kind of starting to say to me that the thing I want to have happen is not happening. Well, there's 2 ticks. That's interesting. The other issue is that the 30-year is just like dead. Like the 30-year has just been stuck there at 125.21. S&P 500 looks a little unhappy. Are they going to go for those lows there? They're awfully close. You say that there's spoofs on the Xian? Really? Because I'm not really detecting anything too unusual in the level 2 yet. Like when I'm looking at this action and I'm feeling like a little frustrated, I'm thinking that it's because we're getting flattening. Ed Stanley says consumers are hanging in there. He is on CNBC right now. But consumers are stepping back. So we're probably going to get a lot here from Dally when they're on CNBC and stuff. You get a lot of stuff, right? Well, SPOOs are awfully close to the lows there, but they haven't gone for it yet. You think that they'll be stuck there till the 20-year auction? That could be. So I'm kind of looking for an exit here and hoping that it doesn't force me to just puke. There was a few points where this looked really good, but it's not anymore. And here they're just sitting at 0.2. They haven't been willing to hit above 0.2 yet, but they might push through here. I think that movement right there was maybe a reaction to something he just said. They were saying that the signs are encouraging and we need more of that. Pausing is off the table? Is that what he said? So he's kind of echoing these same comments from Powell. Focuses on the level of rates. Problem with that one is that I don't think the focus on the level of the rates says that 3.75 is a good rate. I am seeing some strong selling coming in, but the bids seem to be holding it so far. And it's mostly in the 10-year. The 30 just kind of seems to be just chilling there. Your thoughts on valuation? Valuation of what? As a method for valuing companies. Okay, so the market is not informationally efficient. So we've established that many times. Okay, the current price is not reflective of all currently available information. Okay, so it's likely that you would see a difference between your valuation and the current market price, right? And the issue is that like informational efficiency is not recovered until you get out to like a 3-year time period. So if you're trading on the time period of years, then valuation is absolutely the way to go. Like the Warren Buffett method, long-term investing, if you're looking for capital appreciation and trying to make the most out of your investments and stuff, that's the way to go. And yeah, creating as sophisticated of a model as you can for valuations and stuff, absolutely going to help you, right? But on a more short-term basis, one of the things that we might want to look for is like when the market is really out of whack with valuations, and then we get something that suggests that the orders are going to come in a direction that is towards our valuation, right? That's where some of the best trades will come from, is when the market is like really out of whack, and then something comes in to inject some what is the word, some sense into the market, right? Like I think the best example was when the market was like rallying really, really hard earlier this year. And we're like, yeah, but the Federal Reserve is still going to keep raising interest rates. And so then at Jackson Hole, Powell came out and like smacked the markets lower, right? Right. The market was out of line with the fundamentals in terms of like the treasuries, what a correct interest rate really should be based on all available information. And Powell was the thing that they needed to create the orders that pushed the market back in line, right? And those can be some of the best trades. Well, I don't know if it was like they decided that the net effect of something Dally said there was negative, but we are kind of moving back towards the lower end of the range in treasuries here now. So we'll see, I guess. I do think I want to be centered around 113 though, so I'll reset. To really get anything significant here though, I think that we'd need to see the 30-year break 17. So they've got a few ticks to go. It's really going to do something. Well, I've been pretty keyed in here for a while because I'm just realizing that it's only been like 15 minutes. Feels like it's been hours to me. Tony Patino, you're in the right spot, my boy. That is what we do as TradeZN. I'd say, well, you know, we had a good trend up. I was not expecting that move, and I'm still a little unsure what caused that. I think it was some comments from JP Morgan. But since then, it's been a little bit of a rough day for me. Not too bad. It was just, I had one trade where I took a loser, but keep getting sucked to the evens and ZN. Yeah. It's like they'll start to test the lower ends of this range, and then it's like, well, but 113 even is like a really lovely looking price. Don't you want to make your trades there? Right? Lucas says Seth, so I say Lucas. It's like I feel like I'm getting a little bit too much dad here. I don't want you calling me Bond Daddy though, because I'm not that special. You can go call Jeffrey that. I'm only looking for sales on the ZN, so I've been waiting hard. So what has you looking for sales today though? You know, so the thing is that I was kind of thinking here, although it seems like volatility has contracted a lot, right? So I was thinking today more of like a market maker perspective. So when we were starting to get that up move, I tried fading it, thinking that it was going to mean revert, and it didn't. And that ended up being a trend. And I didn't know what caused it, and that's what that trend was, you know? So then the thing has been like, well, I expect us to be mean reverting, but I'm worried about something coming in and kind of like upsetting the balance. And that buy that came in was something that could do that. I don't think that that's actually ending up to be the net effect on it, but it was just like a really big surprise, right? I don't know about you, Tony. I love it when somebody comes in and they want to talk about somebody new that's like they're already into the treasuries. And I already know what everybody else here in chat is thinking because we've been talking about it all day, right? But we were all surprised. I don't know if you were surprised by that up move. But I'm curious to know what it is that you think is going to kind of lead us to overall selling on the day. I will need to work on setting up these bid-ask limit orders away from price on Ninja this weekend. You said I need to look into... Oh, yeah. Dude, Lucas, I think you're totally capable of doing it. I think that it will be a hard thing, and it will seem to you like, oh, I can't do this. I don't understand this stuff. But you can totally do it. You can totally do it. And there is code on the Ninja Trader forum that there's a lot of code on Ninja Trader forum about managing orders and things like that you can probably use as a basis and examples too. So I love hard things. Good. That's what she said. No. What are you thinking, Seth? I think that you're thinking that there's an auction today, right? Wait, what is the auction? There's 20-year bond auction at 11. Leave a like for loving hard things. Ooh, so now this is interesting. Now that we've gotten to the bottom of this range, I'm seeing iceberging. That's different. I'm not sure if that's supportive or if that's for or against further downtrend or not. That's not what I am thinking. That's what I know. Oh, okay. I guess actually it hasn't really said anything about his expectations for today, has he? He's warned us about the auction and the new on the runs. You're coming in. You think push the VWAP, says I really like that idea, actually. Like down to 28.5, that seems like a reasonable spot. Well, there's a 5K offer. It's a 5K iceberg on 31. I wonder how much it takes for them to take the bid. Okay, so 4K, and they are able to put a bid up and hold it for a moment before falling back down. But I think that means that the iceberg might be gone. Let's see if they get more selling into 30.5 and try and take out that side of the iceberg and what happens. Still more. And that one, it ticked down for a moment, suggesting that it's synthetic iceberg. Okay. They are able to take an offer. It's doing the same thing here. Still adding a little bit more uptick in the 5-year. Evening things out. Interesting. How long has it been? I don't know about this one. There's a lot of volume to trade in that spot. That might kind of become a hole. The one thing that might change though is the 30-year could break through here. That could drag them. By the way, what are our correlations doing here? I haven't checked on that in a bit. So the dollar is still pretty choppy here this morning. I'm going to zoom in on that a little bit. Pretty choppy in the dollar. Gold is still where it was. Oil has yet to move lower there. Still between 84 and 84.5. Okay, some more selling comes into the 10-year and takes 30.5 offer with a more solid offer. And the 30-year leading the way. So And I am, especially in the 30 and 5, it's not so much in the 10, but in the 30 and 5, we are getting some signs of, well, I'm going to recenter it around this iceberg area. We are getting some signs of pretty consistent selling. It looks like that, at least for now, they're a little heavy. Not sure if what I'm seeing in the 5-year at the moment, though, is helping. That 07 went bid, and there's a big stack at 067 that might be hard to get through. Okay. Looks like the 10-year dragged them down that time. Oh, did it pull? Did, because they only took 06 half with 22. So that's good. And well, there's your VWAP in ZB. You had some, you mean you're loving this drop in ES? Hmm. Well, that was a pretty good further drop there, but they're retracing it a little quickly, so. I'm feeling like I got what I wanted, and I want more, but I'm not sure if I can, if it will actually give it to me or not. Well, there was a good tick. There was a little bit of machine gunning going on at 30 though. Haven't seen one of those in a while. Do you use any? Well, so Ninja Trader is done in C#. So, although for the most part, you don't really have to be an expert on C# to get stuff done in Ninja Trader. If you are an expert in C#, you can do some really funky things in indicators, but you really don't need that stuff. Like, I have like my videos that tell you about the main functions to give you an idea of like how they're structured. And from there, you should be able to figure things out just from looking at example code. It is still, well, I don't know about this, guys. I'm still seeing a lot of trade coming through here. Seems like this is the spot at the moment. I was, so I'm a little frustrated by that one just because I wanted like just a few ticks more to pay for commissions. I don't know. I feel like we were really splitting hairs today, yeah? Like, that was quite a bit of battle over like 4 ticks, right? And like, look, it's coming back up. It's back up to the spot where we had all of the iceberging. So they've kind of tested both sides of this. I think that overall I had the tactic right for today, and I just kind of got a little unlucky and or was a little bit behind on being informed on that first trade. Yeah. Wait, you didn't know what you say now, Lucas? So I have one video is like ninja script programming basics. That's the one that you want to watch. Then I have another one about data structures. And that one is more if you want to make funky order flow kind of indicators, then you'd want to or level 2 stuff. Then you would want to read that one a little bit. But like, you know, to say here's what the current price is, and I want my limit order to be placed here. Super easy. Super easy. And if you have problems, you can probably just message me in Discord. I'm sure you come into some weird bugs and stuff, but that's where I'm useful. I tell you, I love helping people debug through Ninja Script, as long as they're not trying to do something stupid. Sometimes I have people come in and they want to do something that I just think is like a really, really bad idea, but otherwise. But especially the sort of thing that Lucas is talking about doing, it sounds interesting to me. Also want to be able to scroll up and down to move limits up and down, but I think I can work this out from the jigsaw end. Did you finish the footprint you were discussing in which one? So the last time I remember doing anything with the footprint was we had made a footprint that would help us identify programmatically a step in the profile, and I did finish that and back tested it, and it gave some kind of interesting statistical information. So like it didn't just look like random noise, but that's often what you see with order flow. But the results that I came out of it were, I would say, a little inconclusive. So if there is edge in it, it's not a ton. You know what I mean? You know, one of the things, so you want to hear it? That's something I thought was funny, at least. So there was this TikTok where this guy was talking about, what is her name? Caroline from Alameda Research. And he, I guess his whole thing is insight into the criminal mind. And so the insight into the criminal mind that he was talking about with Caroline from Alameda Research was Dunning-Kruger. He's saying she's a Dunning-Kruger. She doesn't have very much expertise, and she's on Mount Stupid, or whatever you call it, right? The part where you think you know a ton and you really don't, right? where most retail traders spend where the average retail trader spends most of their time, right? Mount Stupid. And he was his example of why she was in Dunning-Kruger. And I think it may be the case. I have to say, I've read some really weird stuff about them, because she was all saying like, oh, we should have a Mongolian style harem, and there should be a hierarchy, and everybody should know where they are in the hierarchy, and constant competition to get to the top. I'm sitting here like, what kind of stupid degenerate stuff were these people doing, right? But anyways, so maybe it's true. Maybe it's true that she is, that there is something off about that girl, right? But the example that he was using was like, she went on, did interviews, and in the interviews, you know, they felt that the things that she was saying were crazy. And so like the things that she was saying in the interviews were like, well, we don't use technical analysis. Most of our algorithms use really simple math. Yeah, we don't really like stop losses where we work, that sort of a thing. And they were using that as an example of Dunning-Kruger, and I was like, well, they were doing high frequency trading, so yeah, that is kind of how it works. They don't really use technical analysis. They're looking at correlations and, you know, if the correlated asset changed or not. And you want to keep the math really simple so that your algorithm can be really fast, because the speed is the real advantage in that situation. And yeah, those kinds of market making algorithms, they don't really, I mean, they still have to have some degree of risk management, but they don't like to have a stop like the way that a retail trader has a stop, where they're sort of like, oh, we're going to get in, and then if it goes vortex against us, we're going to get out. They don't do that, right? Because they have to stay in for, you know, they have to do the inventory and market make over a long period of time to make their money. And so they're more like, they're going to have like a daily loss limit, but they're not going to necessarily have a stop, right? So I thought it was kind of funny. I thought it was kind of funny. I was like, well, yeah, but here's all of the things that retail traders think are really bad ideas, but like that's how high frequency trading works, right? And then I saw another TikTok where they were talking about how do macro strategies work. And he was saying that it was like, okay, so you'd have like a data series, like maybe there's a certain piece of the economy, right? Like some economic indicator, and you use regression to determine where that economic indicator is going and what impact that's going to have on the economy to decide whether you want to buy or sell, right? And what you do is you have like a bunch of different algorithms like that, right? You have like dozens of different algorithms like that, and then you combine them together. So you don't want to have like this one traded and this one traded. And what you want to do is you want to like take all of the everything that it wants to do and combine it together and execute it together so that you can reduce your like your commissions and stuff like that. It'll like reduce your costs, your trading costs, by combining things together. And that like some of the biggest magic and the most complicated stuff was actually aggregating everything together and reducing your transaction costs. Isn't that funny? So I was thinking about that, and I was like, wow, there is something to that. Like I have like a bunch of little things that they seem like they kind of can work in some situations. And one of the things that I really need to try doing is getting a machine learning algorithm that will switch between them, right? Based on how it's doing and what the market is doing and stuff. Because when I look at the way that most order flow back tests go for me, I mean, part of this is I'm a little bit skeptical of my back tested data. Like when I get historical data to replay. So I've been doing this for a while. I've been recording data for a while now, though. So I have some data to do things, but I also want to set it up so that I can run that data in Python where I get the machine learning, right? So we'll get to it. But it feels like every order flow indicator that I've ever tried, it's like it'll go through a period where it works really, really well, and then it'll go through a period where it doesn't work very well at all, and it will switch between that. It's like every order flow indicator I've seen, it seems like it's been like that. So I continue to feel like there must be some sort of hidden Markov model that connects all of these things together that, you know, we're not being told about. Of course, we're not being told about. Like it's not in the research, and like the funds maybe know it and are keeping it to themselves. Well, I think that me getting out when I did, of course, I could have gotten a little bit more because my MFE was 14. Oh, wow. It actually went 13 against me at one point, and I held on. Well, I guess I got lucky. But since then, we were at 4744, and we're still right there. So market hasn't gone anywhere. So I think we did the right thing. I think that there was an opposing order. I think I kind of got this wrong in the larger scheme of things. I mean, like, it was okay, but so first of all, I when I was looking at like this bit right here, so to there, that was where it was like, oh, okay, now we get the mean reversion, we can maybe go down. And this was where it was like it was going my way a little bit, and then it came back against me really hard. That was the one where I lost, right? I think that was the one where I lost. Maybe it was here. I digress. But so this was clearly I don't know if it was just reaction to the news or something else, but this is clearly like a meta order, leg 1, leg 2, and then this one I think here is a leg 3. But I think that what happened was after this, we did start to get a flow the other way. Like, look at the cumulative delta here, right? I don't know what's wrong with my pen. My pen hasn't been working very well lately. I think that they screwed something up in their last update. There was some strong selling in there, right? So I think that this was like selling, and then the two meta orders clashed into each other. So instead of this being like meta order and then meta order the other way, this meta order wasn't done yet, and so they had to split the difference, and that's why you've kind of gotten what we've had here. So if that's true, there might be more legs to these, right? There might be more legs to these. So, but we don't know since we're not 100% sure what's even causing either of these meta orders. So first of all, that kind of makes it kind of difficult to take a trade, because there's no way to know if like one meta order is done and the other one's not, or whatever the deal is. But then the other thing is that because we had these really big icebergs in here, and that kind of all resolved itself and everything, I think that actually increases the chances that the meta orders are done. And if so, we may rotate around this place for a while, right? So I thought that it was going to be like inverse sine law. So when I was taking this, I was expecting it to come back to like 24 or something like that, right? But it didn't happen. That's not how it actually played out. So, yep, I do have to go in 20 minutes. I really want to know what is wrong with my Epic pen. Seems like since their last update, it's been sluggish. If I come and download it, what's the latest version that they've got? $311.38. Oh, that's interesting. Nod 32 didn't like it. $311.38. it again? $3.11.38. You don't use antivirus? I am so effing paranoid, dude. I've been brutalized. Like, the truth is, the only time I've ever had a problem with a virus was, I think, Circam. I think we had Circam. I think that's the only time I've ever fallen victim to a virus. But I'm really suspicious of people trying to screw with me. They just say it's a suspicious object. Nvidia earnings will be key for the market to get another leg higher. What makes you so sure that they're going to be good? Because things haven't been very good over there in the chip space. I tell you something. The whole narrative here lately has been like, what? We're going to go into a recession in 2023, right? Well, the chip makers are usually the first to fall. The chip makers are the canary in the coal mine, and things have not been looking good for them. Now, a lot of that is things specific to the chip industry, so I don't know if we can really extrapolate that to the rest of the market, but certainly doesn't look good, does it? I want to know why it thought that object was suspicious. And also, why didn't it do anything the first time I tried to install it? I'm a little disappointed though. Like, it's been so terrible. See, like, I come in, I'm drawing, now it's doing something. Like, it's just not behaving anymore. I remember which, but some IT expert guy tested the most popular antiviruses, and the best ones were Windows Defender and Bitdefender. I am somewhat surprised by how well the market is holding move after good inflation news. They seem to be quite sure. Well, it's like I was saying earlier, man. Like, we've moved into a low volatility regime. Like, this is why I'm actually so to come out. I really should have been able to have made money today, but it would have only have been a few dollars. So kind of sucks that at the end of the day, I ended up being -1 instead of +5. But whatever. I think that this is encouraging to me though, because the move here I think is going to be it's breaking out and fade it. I think that that's going to start to become the play because we're moving into the low volatility regime. So what we were doing before, which was like, you know, something happens and then it moves and it just moves and it moves and it moves, that's probably going to be less common of a trade for us. And we're going to have to start relying on doing a little bit more of a market making kind of a trade. Now we're still going to have to factor in all of the informed information that we have about what the flows are likely to be and try and predict, try and get a good direction and everything else like that. That's still going to be a key edge to us. But I mean, look at this one. I was in that for 45 minutes and I only ever got 14 ticks out of it, right? That is way less volatility than we've been seeing. I wish I knew what was wrong with my pen though. So the thing is that the first time I downloaded it, it didn't, and it only just didn't like the exe. So what is my CPU doing here? Could it be related to that? Well, why is Brave browser using so much CPU? That's not right. You don't like Brave browser? Better than Chrome. I could go back to Opera. So if I close this down now, it was all. Everything else running using pretty low amounts. That's really weird. But if I come in here, it's still doing it, see? So I don't think it has anything to do with the CPU. It seems to me that it is broken. How is it better? So Brave browser protects your privacy better. I'll show you. So it's using the same kind of like underlying rendering engine that Chrome is using. Okay, it's just everything else on top of it is better. So like when you go into incognito mode, it's like actually incognito. It's not just sending all your data to Google. And when you come into a website, let's go to like Zero Hedge, for instance. Okay, so we go to Zero Hedge. Then here it has this thing, Brave Shields, and then you'll look at it and it will tell you like what it's been blocking. And you can turn the shields off if it really hurts the functionality of the page. But see, it's blocking tracker and ads. It's making sure that I'm using HTTPS, etc., etc., etc. So it's a browser that's focused on privacy. And it was, do you remember that thing a while ago where Mozilla, and this was before Chrome really took over, but like the technical lead for Mozilla got forced out because he was anti-gay marriage, rather. He was anti-gay marriage, right? So he was the one, he went off and he started Brave browser and said, let's make a browser that's focused on privacy. So that's why I use it. So it's better, in my opinion. Every time I see Jim, every time I see you leave a message in here, I'm like, because there's John Grady is a guy. that's been in the community for a while and has, you know, is a big name. And I'm like, is John really here in our chat finally? No, that can't be him. That's not right. Is Jim related? Are you related to John? That would be funny if he was. Oh, we got a little bit of further downside, but it's popping back here real quick. But it looks like that if I wanted to hold out for the 45-minute trade for the, sorry, if I wanted the $20 trade, yeah, it was 344. So if I were at 5.4 now, I could have gotten it. I could have gotten 20 bucks on that one. I would have had to have waited for, when did we close out of that? Would have had to wait for another 30 minutes. I don't know if that would have been worth it. I think I did what I was supposed to. Plus, it's already reversing, so that doesn't suggest that there's like a strong meta order coming in, right? If a strong meta order comes in and I could have predicted it, that's when I'm like, oh man. Ooh, but the S&P 500 is finally broke. Oh, did they break? Ooh, and we're seeing gold rebound and the 6J rebound. This might actually be an okay place to take a long in the treasury. If it wasn't so close to time for me to quit. I have a professor who is surnamed Rothschild, and I have asked him whether he is in line. Maybe he is. You know, I really want to talk. You know what I want to do? If you know anybody, because it could be somebody online. Okay, it could totally be somebody online. And I know this is like a stupid, like a ridiculous request, but I want to talk to somebody that is hyper rich. Not not just hyper rich, but like they have generations of hyper richness, right? Like I want to see, okay, for the Rothschilds, for instance, how is it that they are able to maintain their wealth across generations? Because my understanding is that most of the time it doesn't transfer over. And I think that the handover of wealth from boomers to millennials is going to be a big deal. And I don't know exactly like how that all plays out economically and everything, but I'm also not entirely sure like what are the best ways to do it and all that stuff, right? So, you know, I guess I need to learn more about trusts and stuff like that and go through like the math of like what makes the most sense to do and stuff, because it sounds like it's a really complicated thing. When I read about it and I'm studying for my Series 67 exam, you know, I know all of the key functions and stuff like the different types of trusts and stuff like that. But like in terms of like, okay, if you did it this way, this is how much money you'd save. And if you did it this way, this is how much money. I don't know how that works. But I'm just really interested in, okay, because not that I think that I'm going to be a billionaire, but I want to be doing the things now that I think are going to set my kids up for the best chance of success. And the thing that I'm particularly interested in is like before they're 8 years old. What was if I want to see somebody that was super rich and they inherited wealth, and what was family life like before you were 8? It's true. There's constant movement. People get rich and lose it all the time. It's not always what the left will have you believe, that the rich are always the same and oppressing the poor. Yeah, yeah, exactly. Like the statistic that I heard was something like 80% of wealth has been lost by the second generation afterwards. So like the kids generally tend to have it, but then like their kids are just middle class families again. And what happens a lot is the kids inherit the wealth and then they invest it poorly. So I here's what I think the lesson is in this is that I think the lesson is that getting good at investing only comes from experience. That people think that being good at investing comes from like being intelligent and smart. And yes, I think that being intelligent and smart certainly helps, but I think that most of the things end up being counterintuitive and not what you would think of at first. And so you have to come in and taught like right principles so that you can look at the market and understand, you know, like if you go in and you make a trade or you make an investment and then it doesn't work out, you need to know enough about the market to be able to understand what you did wrong. And if all the ideas that you have about the market are misinformed, which is what most of the information that's out there is, then your learning ends up being useless, right? So you have to have like this base of correct information, but then you have to go through that process over and over and get good at it. And just because your parents were good at it doesn't mean that you're going to be good at it if you don't put the work and effort into it. I think that what happens is you come in and you have the inherited wealth, and so you start swinging hard right at the very beginning, and then you lose it, right? Versus saying, okay, all right, kid, you're going to trade micro treasury futures, one contract, until you've built up enough to you know, to size up and start trading the other part of your money you have. Actually, if I recall correctly, most old families have a primary inheritor who acts as the patriarch, which the current generation agrees. At least that's what wealth management guys back in the day. Yeah, oh yeah, that's probably true too. That's probably true too. So I think about that sometimes, and I wonder amongst my kids how that's, because you know what I'm worried about? I'm worried that like I'm gonna be old, and my stepkids are gonna do things that I don't want to do. They'd be like, it's time for you and mom to move into this resort home. And I'm going to be like, no, we're staying here till the day we die. You can't have the house. Sorry. That's those are the nightmares I have about getting old. Because I think about that. So like, here's the funny thing is with my parents. So like, they're going to retire in a year, I think. I expect that they're going to live for a very, very long time. And they want to go on missions. That's what you do here in Utah when you get old, is you go on missions. So they'll probably be on a mission for 2 years at least. And then we see what they do. But I think that what they're going to do is they're going to have my brother move into the house and watch the house while they're gone. But I'm kind of sitting here like, why don't we all just pool the money together and go and build a huge mansion that has like a, you know, an in-law apartment and everything, so that you'll always be here, and then we'll all have like a nicer facility and everything, you know? We can go and get, and we can go and get it in a place where, like, you know, we get some land so we can have the farm, so we can have the alpaca farm. This looks more and more like we could retrace the bull run after the news in the coming days. Are you talking about the bull run in the treasuries? Not sure which one which one you're talking about. I am kind of wondering, like to the point of like in the treasuries, for instance. Wouldn't surprise me to see 112 again this year. You're saying in equities. In equities, well, so you were saying that you think the market could come back to 3750, let's say. 3750, let's say. Why alpacas? Because they're freaking awesome, dude. Why showing you, like, here, I'll show you. Look at these. Oh, no, I gotta get going. Another day. We'll talk about alpacas another day, guys. I will see you tomorrow. Stay excellent, team.